Let's bring in former Minneapolis Fed President Narayana Kocherlakota and former Fed Governor and CNBC contributor Sarah Bloom Raskin. A very good afternoon to you both. Sarah, I'll start with you. The discussion we had earlier was that it's clear from the Fed chair that the hurdle to hike is infinitely higher than to cut, but that nonetheless the base case now is no action next year. What's your takeaway?
Right. That's exactly the read, and I think that was the communication that Chair Powell put out in the press conference as well. The indicators, though, are still coming in, and they will continue to come in next year, and I think there will be some storm clouds. In particular, manufacturing. Manufacturing is something that is still not looking good. In fact, we just saw that U.S. manufacturers, for the first time, are not going to be spending more next year. And this hasn't happened since I think, 2009. Manufacturing is still down. Business investment still down. Productivity, the productivity numbers are coming in slightly lower as well. So I don't think the storm clouds have really dissipated. And we also have to keep in mind that, from the perspective of the economy, monetary policy is not the only game in town. And the role that fiscal policy is going to play to deal with some of the longer-term structural issues, I think, is something that the Fed's going to have to keep an eye on.
Narayana, Sarah brings up some good points here. If we continue to see the divergence widen between the factors that are strong, like the consumer, and those that are weak, like manufacturing and business investment, can we continue to see growth at the same level, or will that naturally start to fall?
Yeah, it's a great question. And these are exactly the questions the Fed's going to have to be watching in 2020. The no rate case is the base case, but no rate hike case or no rate cut case is the base case. But we're going to have to be watching for exactly, do we have enough internal strength in the economy to outweigh the global factors that are weighing on manufacturing. The consumer has continued to carry the U.S. economy forward. I myself would bet on that continuing to happen in 2020, but that's exactly what the Fed has to be watching as we head into next year.
So, Sarah, do you feel like the temporary truce that we had between the Fed and the president will continue, or the fact that we didn't see a cut today will lead to a re-escalation of that?
Well, I don't know if today's action will lead to a re-escalation, but I think a re-escalation of those, that kind of bullying behavior is going to reemerge for sure. Because if you look at the pattern of it, it pretty much emerges when the markets do something that the president doesn't like, particularly when the markets go down. He will want to blame the Fed, and I have no reason to think that that technique is coming to an end. From some people's perspective, it's actually been kind of effective. The president has actually gotten what he has wanted from the Fed, with the exception of negative interest rates. But it has, in some sense, worked. Now, from the institutional perspective of Fed independence, I would say it has been really bad.